I'm Dan Kleffler in New York, and as the financial markets are coming to a close in Wall Street for this Friday, January 9th, this is Story Stock. D.R. Horton, the home builder, popping on Wall Street today, hitting a new 52-week high. Giving a lift to the company this week, President Obama revealing his plan to boost the housing market by announcing the FHA will cut premiums for certain loans, which could cut annual mortgage payments by nearly $1,000. So to explain why home builders like D.R. Horton could be getting a lift to start the year, I want to bring in J.C. Parets of Eagle Bay Capital. J.C.?
Thanks for having me.
Okay, so listen, obviously it's the largest home builder, so they, I'm assuming, would have the most to gain from this.
I like home builders as a group. I know the announcement just came out this week, but as usual, price has led that news announcement. Home builders as a group have been up 25% just in the last couple of months in anticipation of that news announcement. In fact, D.R. Horton was up 36% in that same time frame, so outperforming the entire group in anticipation of that. So to your point, sure, it looks like they are the ones that can benefit the most.
And so just like, I mean, housing in general, I mean, it's a good start right here to the month. And we expecting that to continue on through the month of January, possibly even through the first quarter?
I think so, which is a really interesting story. Last year, one of the best performers was the real estate investment trust, right? So these are very high-yielding securities, and in a low-interest rate environment, interest rates got destroyed last year. So fixed income investors that were looking for yield that couldn't get it in the bond market had to go to the stock market in order to get that. So the REITs actually performed twice as well as the S&P 500 last year. So now we're seeing that rotation. The REITs are still outperforming, but now it's actually going into the home construction companies. The Toll Brothers, D.R. Horton, Lennar as well, Pulte Homes. They're all doing very well. So I think that's here to stay. I think it's probably going to be a big story throughout the first quarter.
So I guess safe to say then you've got a fair amount of confidence, then you'd be pretty bullish then on housing in general?
Yeah, I think so. At the end of the day, we look at liquid markets, so, I wouldn't be able to speak on behalf of, buying residential real estate, in a traditional form. But for us as market participants and fund managers, we want to be in those home builders. Absolutely. I think they're going to do great in the first quarter.
There's a home construction ETF, ITB. Do you like that right now?
I do. ITB is the one that's provided by iShares. It's very concentrated. In fact, at the top 40% of the entire portfolio is those four names that I mentioned: Toll Brothers, Lennar, Pulte, and D.R. Horton. So that's 40% of the entire portfolio. I like that on its own, as well as relative to the S&P 500 as well. But there's another one, XHB, which is provided by Spider, and that one is much more diversified. So the top holding is actually just 3.5%, and it's not even a home builder. It's Lumber Liquidators, which is a specialty retailer, and names like Whirlpool and things like that are also big components. So there are a few different ways to take advantage of this space using those two ETFs, but they both look great.
Let's talk a little bit, just briefly before we let you go. I just want to ask kind of about the Fed's interest rates and the amount of impact we think going into this year for 2015. Is it going to be as strong of a force as what it was last year as far as housing markets go?
I think so. I think interest rates are going to stay down. We don't listen to economists, and we ignore most of the economic data. We like to see how the market itself reacts to all of that. And the Fed Fund futures market has been dead on. They nailed that trade last year, suggesting rates were going to go down all year, and they're still telling us the exact same thing. So we're still in the camp that the Fed doesn't do anything this year and waits till at least 2016 to start raising rates.
All right, well, a good way to end the week and good way to go into the weekend as well.
I think so.
J.C. Parets from Eagle Bay Capital, thanks so much. Appreciate it, as always. Yep. You have been watching Story Stock. Stay with abcnews.com for your latest headlines. I'm Dan Kleffler in New York.